Sullivan. I'm a former IRS agent and teaching instructor with the IRS. Welcome to my YouTube station. I've worked about 10,000 cases in my life. I'm a former revenue officer. I work the offer and compromise program. I have a whole team of former IRS agents on staff. I've been on national news many times. Many of my subscribers have come to me because they see me on either Newsmax, News Nation, CBS, ABC, Briefing Room. I don't know. I've been on all the stations. Anyway, I have a whole team of former IRS agents, and we're experts in IRS resolution matters. I kind of give you a peek inside IRS when I can and show you what goes down since I've done this so long. I've been doing this for 50 years. So I want to tell you how to negotiate your own IRS offer and compromise. You know, even though I do this, and I will flat out tell you at the beginning, you're a fool to do your own offer and compromise, but it's okay that you can do that. I'm still going to tell you how to do it and what the difficulties of the situation are doing that. First of all, you should always go, if you're going to do this yourself, to the IRS pre-qualifier tool. The IRS pre-qualifier tool tells you, if IRS puts it out, it kind of tells you whether you're eligible or not. It's kind of a good indicator, but it's not a perfect indicator. Second is you have to know the system itself. The thing about the offer and compromise that a professional will know that you won't is when to file the offer. It's really important. All the cards and all the stars have to file up to when it. So you want to file the offer when you're doing the least and when you understand the IRS offer process. The offer is simple. You're going to fill out two forms. Generally, the 656, which is the offer itself, and the 433A OIC, which is the offer financial statement. There's a 433B too, but the 433A OIC is for you to prepare the offer with. The trick is to know how is IRS going to look at this and the documentation that you need to put on this to do this yourself. Always put a cover letter on, no more than a page and a half to two. No one at IRS is going to ever leave more than a two-page letter. You want to say why you're filing the offer, what exhibits, why you can't pay it. You want to let IRS know what's going on and why you really can't pay the debt. Separate yourself by an IRS cover letter. You have to know how to do that. Then understanding the system is critical. IRS, as a former agent, remember I accepted and deny offers. I keep a close look at assets and look at the values. I want to make sure your values are correct and you're not underpricing things. And I want you to know, in fact, that if you can pay the offer out, but you don't have liquidity, that doesn't mean anything. For instance, if you owe $100,000 and you got $150 in the IRA and you have excess money and equity in your house because you can't get to it, that doesn't mean you can offer. You can't. Your offer isn't going to be accepted. IRS is going to look at the values, the total values of your assets. And if your values of your assets are more than the tax, you're not going to get the offer through. Don't even bother to file it because you're not going to extend the statute for a year plus. The other part, which is the big wake-up call, is people don't understand that IRS has a national standards program. Wow, a national standards program. What's a just exactly it. What you do not know is IRS is going to challenge your income and expenses, and it gets costly. Because any money you have left over at the end of a given month for an offer is going to be multiplied by the years on your statute. That really adds up. For instance, if you have $500 left over at the end of the month and you have 10 years left on your statute, you figure out how much that's worth. That's worth a bunch of money to IRS, and that's what knocks most people out. The idea is not to have any money left over at the end of the month. So when you get to your IRS income and expenses, what you need to know is you're going to put your income down, and then you're going to look at the expenses, but you can't look at your expenses that you want IRS to attribute to you. You have to look at the expenses that IRS is going to allow you. And how do you find those out? You can go to the IRS national standards for food and clothing, IRS national standards for housing and utilities, IRS national standards for car payments, IRS national standards for car expenses. Understand that IRS are going to put their values in, not yours. What do? They add the two together. They look at the value of your assets. They look at what you have left over at the end of the month by their standards, and they multiply that by the number of months that you have left on your statute. and that number goes up and up. So at the end of the day, if you have fewer assets and no money left over, you have a chance for the lower offer and compromise. Remember this, all tax returns must be filed. You must be current on your estimate payments or withholding. And if you do get your offer go through, and you're fortunate to get your offer go through, you have to stay current for the next 5 years, or your offer gets wiped out and you start all over again. Best of luck. Now you know, from a former IRS agent, teaching instructor of the offer and compromise, how to get your offer through. I wish you the best of luck. If you get stuck and you need help and you really want your offer through, you got to talk to Big Daddy here. Thank you. Give me a subscription. I appreciate you.